This is why you need to pay attention to Trump's deregulation plans. The financial landscape is on the brink of significant changes, and understanding these shifts is crucial for anyone involved in the market. Banks are gearing up for a major overhaul. The anticipation is palpable as financial institutions prepare for a new era of deregulation. With Donald Trump preparing for his second term, financial deregulation is back on the table. His administration is poised to roll back many of the regulations put in place after the 2008 financial crisis. On one hand, banks are thrilled about the potential for higher profits, less antitrust scrutiny, and relaxed capital requirements. This could lead to increased lending and investment opportunities, driving economic growth. Mike Mayo from Wells Fargo even called it a decisive regulatory shift. He believes that this could be a turning point for the banking industry, allowing for more innovation and competitiveness. But hold on, not everyone is cheering. There are significant concerns about the potential risks associated with deregulation. Critics warn that rolling back regulations could bring back the risky business that led to the 2008 financial crisis. The memories of that economic downturn are still fresh, and many fear a repeat scenario. Remember the Basel III endgame? These international banking regulations were designed to prevent another financial meltdown by ensuring banks have enough capital to cover their risks. Trump's re-election puts those international banking rules on shaky ground. His administration's stance on deregulation could undermine these global efforts to stabilize the financial system. Brian Mulberry of Zacks Investment Management predicts that Trump will block any increases in capital requirements. This could lead to banks taking on more risk without the necessary safeguards. This means banks might not have enough cushion if things go south. The lack of adequate capital reserves could make them vulnerable in times of economic stress. In 2018, Trump already raised the too big to fail threshold, exempting many banks from stringent stress tests. This move was seen as a way to reduce regulatory burdens, but it also increased the risk of bank failures. While deregulation might boost bank stocks, just like in 2017, when they surged 30%, it could also make the system vulnerable. The short-term gains could be overshadowed by long-term instability. Case in point, the collapse of Silicon Valley Bank last year, partly blamed on relaxed rules. This incident serves as a stark reminder of the potential dangers of deregulation. Even with the current economic headwinds, banks are thriving, outpacing the S&P 500. Their performance has been impressive, but the question remains, at what cost? But with Goldman Sachs projecting lower market returns over the next decade, investors might need to look harder for those hidden gems. The landscape is changing, and finding profitable opportunities will require more diligence and strategy. So, will Trump's deregulation be a boon or a bust for banks? The answer is complex and depends on various factors, including how well banks manage their newfound freedoms and the overall economic environment. Stay tuned to find out. The coming months will be critical in determining the impact of these regulatory changes. Keep an eye on the news and market trends to stay informed.